Now, we are back with another stock review, and today we're going to look at a little bit of a different industry. One that a lot of people they're familiar with the product, but they may not be familiar with the company or the stock behind the product. So let's jump into today's stock. We are going to be looking at a company called Zynga. Now, what Zynga does is Zynga is in the gaming industry. I mean, they're making social media games. They're making, those games you play on your cell phone or those funny games that you play when you're on Facebook, those type of games. And what we're going to do is we're going to dive into that company. We're going to look at their business. We're going to understand, hey, what products are they really selling? Because if you realize the games you play on Facebook usually are free. So the question you ask is, how much money could they really be making and what are they making their money on? So let's go ahead and jump into that stock. All right, first up is going to look at the products. Now, the products that they're selling are virtual items. If you notice when you play those games, a lot of times there's an offer in there where you can either buy clothing for your avatar or you can, buy, I guess, upgrades, or you can buy additional coins or buy additional lives or buy hints to get to the next level. Those are what you would call virtual items. Now, in a game, when you're playing those games and you're buying those virtual items, you don't really think about it that much, but that does add up. And what I would say is when you look at that type of product, what type of problem is it solving? Because we like to look at what's the product and what problem is it solving for the people who are buying it. And I would put this in entertainment. I would say it's solving the problem of boredom, I guess. But it is a very, very popular product, and it is a very, very popular, or I guess you say a common problem that a lot of people are having, especially during the pandemic, because people are trying to find things to do with their time. The next product is going to be advertising. Now, because you have all of these eyeballs playing these games, if you notice, a lot of these games have ads that pop up, whether it's ads in the corner, ads on the top, or the banner. Or sometimes, if you want to get more lives to continue playing the game, you can watch an ad and win a prize that you can use in the game. So, the problem that is solving is branding and promotions. And, there are so many companies that they're working with on that. Now, the thing I look at to see, okay, all right, they're solving these two types of problems. So where is their revenue really coming from? Now, in Q3 of 2020, they announced that they made almost $503 million. And guess how much came from advertising versus virtual items? Well, I'll just go ahead and tell you. I mean, there was about 64,000 or $64 million came from advertising, and the rest came from virtual items. Yes, over $400 million in revenue from selling virtual items. That's a lot of people buying their avatar new shoes or buying new lives, whatever the case is, which tells me that this is a very, very big problem and they're solving it in a very, very effective way. So when it comes down to the product, the score that I'm going to give them is an A minus. I mean, the product isn't something, it's something you can live without, but the demand for it is so high, which is why I'm giving this product an A minus. Now, the next thing I want to look at are the financials, and I want to dive into that and point out the things that stand out to me. So when we look at the financials, what I will say is their financial records, in my opinion, they look like they're in pretty good shape. If we start from the top and we say, okay, revenue is performing very well. And as you can see, even during a pandemic, the revenue has been growing. I mean, in Q4 2019, they were pre-pandemic, they were at $404 million in revenue. Now in Q3, during the pandemic, they've grown almost $100 million. They sold almost $100 million more. That is approximately 25% growth in just, from Q4 of 2019 to Q3 of 2020. And that is impressive quarterly growth on their revenue. So they're doing very well on the top line. And then the other thing that has been very impressive is when you start to look at their gross margin, they seem to have been able to keep their costs pretty manageable to where they've been able to keep a solid profit margin. Now, they have been teetering down some on their gross margin, which tells me either they're selling more expensive products or the things that they're selling actually cost them a little bit more. But I'm not overly concerned because they're still over 50% and they still seem to be able to generate a lot of gross margin dollars. Now, I'm not happy about the operating profit because what that tells me is they probably have a lot of overhead and they probably have, they're investing in different things, whether it's they're expanding the team, they're working with R&D to come up with new products. So I'm not overly happy about that section, but I'm not too disappointed because when it comes to a business like this, they have the ability to actually scale. And since they have the ability to actually scale, what that tells me is the money that they're investing in their operating expenses could be going towards setting them up to be able to sell their next version of their products so that they can continue innovating and continue the top line growth that they're seeing. Because usually when you see a company growing in revenue, especially in the software kind of gaming space, that means they've been making some investments to attract new customers, or they've been working on their marketing efforts to attract new customers. And because their revenue is still growing at a pretty solid rate, I'm not overly concerned about it yet. Now, the other thing that I want to point out is the cash. Now, when you're in a business like this, you have to invest in the next generation of the product or where the product is going. You definitely want to make sure you have a solid amount of cash on hand to be able to invest in the business. Because if you don't have enough cash to invest in that next generation of the product, you're probably not going to be able to compete against your competitors. But they seem to have a pretty solid cash level. And then when we look at their operating cash, so operating cash, what that simply means is they are able to generate cash from the normal process of selling their products and managing their expenses. And when we look at their operating cash flow, they are in a positive position, which means they have the ability to continue funding the growth of the business. And now, because they have solid revenue growth, they have pretty decent gross margin, and they have a pretty solid position on their cash, and they're able to generate more cash from their operations, which means the business has the ability to fund itself, meaning you don't have to go out to bring in new investors, or you don't have to go out to take out unnecessary loans, because the business has the ability to fund itself. I would say when it comes down to the area of finances for this company, I'm going to give it an A. Now, I didn't give it an A plus because I really want to see some improvement in the operating expenses, but an A is still a really good grade for where this stock is. Now, when we move on to the actual stock price, at the time of filming this, the price is currently $9.12 a share, which is actually up today because when I looked at it yesterday, it was $8.71. So there's been some growth and some attention around this stock. And I think because the stock has really shown some really good potential and the business seems to be running well and they seem to be managing the expenses, the expectations, and the deliverables of the business. Because when I looked a little bit further, when the business releases expectations and said, we expect it to be here by the end of Q3, they actually exceeded expectations. So there is a lot of interest in this stock because they're performing well. They have a good product and they seem to be managing the business well. So when it comes to the stock, I would say this stock definitely has room to grow. I mean, even when you look at the 52-week high and the 52-week low, the stock has still not hit its 52-week peak, which doesn't automatically mean it's going to go back up to that 52-week peak, but it does give me an idea that there's still a very high level of confidence in this company if it's able to still perform well and close to what its 52-week peak is. So when it comes down to the stock growth or the stock potential, because let's be honest, as an investor, that's what you care about. You want to know, if I put my money into this, how will I make money? And that's either going to be a dividend, which this company doesn't offer a dividend, or it is going to be by appreciation in the stock price. So you want to know, how likely is it that the stock price could go up on this stock? And I think when it comes to that area, I give it an A, because I think that there is potential for it to grow. So when you look at all three areas, the product and the problem that they're addressing, you look at the financials, and then you look at the stock potential, I say when you add all that up, I give it an overall score of an A. So if you're looking for a stock to invest in, Zynga could be a stock that you should consider. The price point is below $10, which means it's pretty well in reach for a lot of investors. And I believe, based on their performance, there is room for this stock to grow. But before you invest in any stock, make sure you do your own homework. What we've just done here is to start that process for you, to do a little bit of homework and to let you know why we have interest in this stock and what we see when we do the homework on this stock. But if you want to actually follow and get more of these types of videos that we are producing as our team analyzes stocks and breaks it down for you, you can join our Smart Investor community on Patreon, because when you join on Patreon, you get more videos like this, and we are creating more and more every single week where we dive deep into these companies and we break it down. We break down the products, the financials, and we talk about where we think the stock price may go based on what we're seeing and what's going on with that company. And if you want to take it a step further, and let's say you're like, hey, I like these videos and I actually have some stocks I'd like the Business Talk Library team to dig into and do some homework and feature on the show, well, then you can become a VIP investor, because VIP investors get all of the access that a smart investor gets. And VIP investors get the opportunity to submit names of companies that you think we should do the homework on and feature on the show for you. So if you want to see more of this content, go over to patreon.com/Business Talk Library and join the community. Thank you for tuning in to the Business Talk Library. If you like our content, be sure to follow us on social media. And if you want to see more of our exclusive content, you can subscribe and become a member on patreon.com/Business Talk Library. Hey, the Business Talk Library is the place where business makes sense.